Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't, and just a little disclaimer, nothing should be construed as financial investment advice. This is just my thoughts on the market. See more below. Let's get into today's stuff. I would just say, let's get into the economic data. Of course, one thing about the mortgage market that's actually good is the 30-year mortgage rate, 6.67. Those interest rates are going down. Applications are going up. See, refi is happening. As interest rates come in, so does refi. The big news today was core inflation on month over month, 2%, less than 3. And on a year over year, if you look at it here, the media says 2.8. I guess that's the inflation rate, but the core was 3.1. So core is still going up. The inflation rate, which probably includes, I haven't looked at that, that's 2.8. So they're trying to uh plead. So if you actually look at it though, if you look at the markets, this just says dead cat meow. The S&P's up 27, Nasdaq 212. But oddly, the Dow Jones is down, which is weak news, which shows I think we're still in this bull market might be over. The one that began in '09 and the post, it might be over. We might be going to this 7 to 20 year bear market that I think we're going to go through, but this is very weak. As I said, dead cat meow. I actually have a cat. My cat's cool. But yeah, if you look at gold, gold, I mean, it looks like it's breaking out more than a lot of analysts that do charts and breakouts. Look at the GLD. It's up 0.43 today. Definitely outperforming the stock market. No, S&P was up 0.49, but out the Jones. SLV, let's look at that. It's up 0.87. That's outperforming the stock market, the 0.49. Let's go to SILJ. Let's see what the miners, the silver miners, 2.4%. GDX, zero point 0.4. GDX, they're not performing all that well. Not bad. GDXJ, we'll just do that. Wow, look at that, 1.43%. So very good stuff. As you can say, there's nothing more I can say. I wanted to do some other stuff, and I had all these articles to talk about. But I was just so tired. I had a long day. I just did not feel like taking them and reading them. But another American Eagle. I'll just show the article tomorrow. They're doing poorly. They said they've issued in their fourth quarter that guidance is poor. And if you look at it, this is just a theme coming up and up and up and up. So even if today's data is okay, it's nothing. And I think the reason this inflation has come down is because weaker demand. It's not why. Inflation, you want to come down because your currency is rising. And not only that, but you want it to come down because you're productive. This is just coming down because people can't go out anymore. People may have lost their jobs, so they don't go out anymore. So they don't go to the restaurant. And now the servers there don't get their tips. The owner, they don't have their profits, and maybe they have to contemplate, I don't think we're in that stage where they have to contemplate shutting down. But they have to contemplate maybe they have to lay off or maybe have to give less people hours or whatnot. So, I mean, I think inflation's going down for that reason. I don't think inflation's going down for the right reasons. And that's the thing about looking at the market you're in. And this is why Wall Street will get it wrong completely, is they'll talk about right now they're talking about tariffs. And I don't I, I did a Canadian trade war video. You can go on that. Go look at that. You can see what I think. I think it's stupid. If we had a strong economy, it wouldn't matter. Even if it was like a price up, if people had great, good paying jobs, it wouldn't matter. If we were very productive, they would just buy more US goods, and that would the reason it would be damaging per se is because they have to buy them anyway, and we can't produce them here, and it's just a higher cost, and they have a low wage anyway. But I don't really like talking about them, but like when you read the news, that's all you hear. And the reason why is they don't want to acknowledge like at at length I always talked about the four bubbles, the auto loans, the credit cards, which I think are going to be the next two. Commercial real estate, I think with these return to office are going to be okay. But the only thing also is that, everyone's being laid off. So they'll do a return to office, but they're not going to get as many people coming back to work because they're being fired or laid off. So it's not going to be commercial real estate will bust. But the thing is, if you get laid off and you have auto loans, some people might just not pay them. Or car loans, they may not pay them. Or credit card loans, they might just have to default and go back and live at home. Or if they're an adult, they don't, who knows, maybe they'll have to sell their house and then housing market crash. So I mean there's a lot of things happening here which I think are going to be and that's why I said, QE is coming again. QE, I mean, I'm looking at these analysts here. And you get going uh and there's a lot of people that really think they're going to cut rates. Actually, you know what? I just found this. I'm gonna go share it real quick. I'm just gonna do the headline. I have not seen. If you watch this channel, you know. But look at this: cooler inflation paves the way for Fed to resume rate cuts in June. They're already sniffing out the rate cuts. Cooler inflation, cooler expected in February. Tariffs rekindle price, whatever. Fed to keep policy rate unchanged this week. Pace of rate cuts will depend on Trump's policy. So I see all sorts of things. Was this number manufactured, the inflation rate? It probably was. We know it's more than 2.8%. Anyone that's been in the grocery store. What's very interesting is the core CPI, which excludes food and energy, was higher than the inflation rate. So, maybe gas has gone down. I know. I doubt it. I haven't driven that much, but anyway, that's all I have to say. Remember, not financial investment advice. Uh, just yeah, the low inflation rate. But we're getting bad data. And I said, we can't have both, but we're going to get one. So we're getting worse economic data, but lower inflation. But the inflation is going to come again. It's going to come after the next stimulus. So I think there'll be a monetary and fiscal stimulus again, middle of this year or late this year. So anyway, as I always say, remember, not financial advice. Do your own research and consult financial advisors before investing. So, anyway, see you next video.